a volatile week. We know that for the stock market. What a week getting down to today when we were negative, and now we're up 50 points. We bring in our panel right now. Daniel Frishberg is with us, Chief Investment Strategist with Laffer Frishberg, and Rich Peterson, Director of Markets, Credit, and Risk Strategies at Standard & Poor's. General, good to have you on the program. Anything coming out of the G20 this weekend, Daniel? What do you think?
You know, this is the first time, Maria, that we didn't go down, that the bottom didn't fall out on a Paulson speech. In Chicago, we call it the Paulson effect. But today's the first day that it didn't work. Now, if that story is sold out, he admitted yesterday, that's it, I have no idea what I'm going to do. And that's sold out. So I think you could have a very nice rally next week. And you're right, no matter what the fundamentals are of the economy, we know they're going to be horrible. But if that story's sold out for a while, you could get 10-20% rally anyway.
So from a trading perspective, your predisposition is to get long stocks here for a short cycle.
For a very short period of time.
How tight would your stop be? In other words, how much of a loss are you willing to endure?
I wouldn't worry about the loss so much because we're pretty much sold out. But what I would do is any gain I would protect. I would not give it back. This is not a long-term rally.
What about oil? How about that move, huh? Down from the highs. What do you want to do in energy right now?
You know, Arthur Laffer, my partner, called that one right at 147. He thinks it's still going lower. He's got that one perfect. So I would say commodities are still going to go lower.
Rich, if you were to look at any of the anomalies in earnings, when you sift through all of the data that comes in, do you see any place, however narrow the thread may be, where you're actually seeing either earnings stability or expectations of earnings stability or even acceleration?
I mean, looking across the board, you just see this, like, just pulling in, just retrenchment. Sure. IT, healthcare, retail. And like,
what about biotech? What about, I mean, is there any place where
the... How about technology? Isn't technology somewhat stable?
No, it hasn't. I mean, Cisco, look at Cisco's earnings. I mean,
Intel. And we're not even halfway in Intel's quarter.
And you're seeing the announcements of layoffs in that sector.
So nothing.
And nothing really there. And the concern, too, you talk about the TARP. You know, the second part of the TARP has to be voted on. We saw the hostility in Congress today. You know, that could be very much a suspect number where that 350 comes in.
Oh, you're going to say?
Yeah, but look, the economy is soft, but these companies, they have real estate, they have inventory, there's value in there. Right now, a lot of them are selling for less than the value of their assets and their cash. At some point, that becomes important when the fear goes away. So they're going to go up. The economy will still be getting softer, and we will be rallying, but it's just not right now.
At some point, it's priced into the market, right?
It absolutely is, but the question is, what is it?
If you're holding cash, you're up 20% in the last couple of weeks compared to every other asset in the world. Compared to currencies, gold, stocks, everything. You're up 20% if you got your money in a money market.
Daniel, you can't do that forever. You get paid to have ideas. And
last time I was on, I told you about corporate bonds. Hewlett-Packard's up 10%.
That was a good call. That was a very good call. Thank you for that. We appreciate it.
We'll see you guys.
Not too late for that.
We'll see you guys in 20 minutes. All right.
Thanks so much, gentlemen. We'll talk to you in a little bit.